Task 8. So task 8 is about the external business environment. We've got a few questions here. 14 marks. Okay. Global Limited expanded their business to take advantage of opportunities in countries other than the UK. They want to make sure they increase in profits. Identify which statement explains the meaning of globalization. So globalization is, trade across the world, really. So buying goods from an overseas customer, possible. Operating internationally at all levels of the business. That's a good one there. Means employing staff members from different countries. I mean, globalization has impacts on staff members from different countries, but very much it sort of feels like answer B there really. Globalization means operating internationally at all levels of the business. So we're sort of, it could be anything, couldn't it? It could be sales, it could be purchases, it could be getting our raw materials from a different country. And it could be employing staff members as well. So really, those two are part of it, but close that, but weren't the full thing. And it's B, but it's a bit of a naff question. Right, okay. Identify what the following statements about risk and business and risk are true or false. So risk versus reward is the fundamental reason for business really. Is we want to make sure that we get back a better reward for the risk that we take, and risk is in terms of liquidity. How liquid is our assets, in terms of how quickly we can get our money out and how quickly we can get out of it, get out of any kind of things, or barriers to entry, barriers to exit, and then the general market that is that thing operates in. Electricity supply used to actually be incredibly ridiculously sort of straightforward and very limited sort of risk. Might be a bit more exciting since the cost of living crisis and the invasion of Ukraine. Versus the internet. So a business only exists to make profit. And see, when we see the words only, always red flags there. Really, no, businesses can exist to not make profit. I mean, they could exist because they're philanthropic exercise. So that's not true. That's a false thing there. Businesses take risk to make profit. Well, yes, they do. Risk versus reward. Instead of stuffing the money under their mattress at the bed, the entrepreneur sort of invests, and they take those risks to make profit. That's the point of it. Uncertainty means the same as risk. Well, it does really, but the answer says it's not for that one really, and I think it's one of the greatest of questions, that one really. I think that's you want to sort of saying in the fullness of the thing there, roll with some of this stuff really, because certainty removes risk. So uncertainty must definitely mean. I mean, it doesn't mean the same, but it's sort of like it's just. Yeah, I think for the purposes of actually corporate finance, it would really in there, because it's talking about we talk about the difference of risk versus reward, but at level 2 AAT it doesn't stuff it. Let's move on from that one. Identify the statement which explains what happens when there's deflation. So deflation is the reduction in prices. So normally we have inflation, and when we have deflation, prices go down. Now it's often considered a bad thing, deflation, because it sort of reduces investor confidence. Everybody gets really upset and unhappy and whatever. So it's great. So interest rates keep rising. Well, there's no reason for that. There's a sort of different things. In fact, to be fair, when you have deflation, usually the central bank panics a little bit and wants to increase. Always wants to have this idea of a little bit of inflation, but not too much inflation. So to do that, you reduce interest rates. Prices fall temporarily. There's deflation, so prices fall, but is it temporary? Well, no, because it's deflated. If it was temporary, then it would be inflated back up, so there wouldn't be deflation. So by definition, it can't be that one. The value of money increases continually. So the value of money is what I can buy for it. So if I got £1, and let's say yesterday I could buy 2 bananas with that £1, very expensive bananas, but still there we are. And there's deflation, so now I can buy 3 bananas with that £1. By definition, that money can buy me an additional banana. It's worth one more banana. So the value of money has increased there. So it is C, is that one, rather than those two there. Economics, an economics question anyway. Identify whether the following statements are likely to cause an increase an increase in demand for a luxury product. So a luxury product is one where the more money if I have more money, then I will buy the luxury product. If I have less money, I will not buy the luxury product because I'll have to buy, I want to spend my money on essentials. So we have things like essentials and we have luxury products. So there is a general increase in household income. Oh, there we go, increase. So I've got more money. We've spent our money on essentials. We've heated and lit the house, and we've had our food, and now we've got some money left over. So we go and buy a holiday, really. And the holiday that we buy is like a really nice one in the Caribbean or somewhere, rather than a camping holiday somewhere in the somewhere cold. The cost of raw materials to make the product is reduced. Right, so if we reduce the cost, so the cost of raw materials is reduced in there, so that has no impact really on it. I mean, this luxury product is just cheaper to produce. Now, no, not really. No, there's no increase in that one. There's no increase at all. So that doesn't make an impact really. Theoretically possible, I think, with gifting goods that actually will reduce it, but we'll just avoid that. It's just too high in that one. And the average price of products increases. So if the average price of product increases, then that won't increase it, because let's say the average price of products increases and our household income stayed the same. So we're now spending more on our essentials. We've got less left over from the luxury goods, so it wouldn't have been no increase. In fact, what would we go into? Put, let's say, a reduction in here and see whether you would have gone for a reduction. Government is concerned about the rise in unemployment in young people. They have a number of options they can take, but have communicated to the public they will not be increasing rates of tax. Okay. Identify a statement of what tax is. Okay. Financial charge made by a business. No, that's not a tax. It's a financial contribution made by a government to the business. No, that's a subsidy. And a financial charge made by the government. So that is what tax is. So tax. The government going and taking money off either businesses or individuals, or applying it to goods and and effectively taking off individuals that way. Right. Now, so identify whether the following taxes are direct or indirect. So a direct tax is applied directly to the sort of the individual. An indirect one is applied indirectly in there. So just to go through there, corporation tax is applied directly to a company. VAT is applied indirectly in there, so it's an indirect tax. It's applied to so it's applied to a sort of sale, and then is collected by the supplier and then handed over to the government. So it's an indirect tax. National insurance applied directly to employees' wages, either employers or employees' national insurance. Okay. 2 principles of an effective tax system. Alright, so in terms of our effective tax system, I mean, we're talking about effective now here. There's 2 things about effective tax system. One, in terms of it's efficient to collect, and the other one is that it's fair and seen to be fair. And so we used to have a system, a fair focus on fair taxation. That sort of broke down a bit under Gordon Brown, really, in sort of New Labour, where he very much wanted to get as much money as possible to invest in public services. And so he introduced the notion of stealth taxes. We didn't used to have things like double taxation. Of this, there used to be sort of fairness, really. So this is quite an out-of-date question, if I'm being truthful. We used to have fairness, like you couldn't tax the same income twice. So let's say if a pension, if you invested in a company for your pension, when the company made dividends, you had a little sort of amount that you got back that went into your pension pot, because you were going to be taxed on that income later on when you received your pension. So you would have it, you'd be taxed on income tax. That got removed. So we'll tax corporation tax and we'll tax them with corporation tax, and then we'll tax them again through income tax. So you get these sort of things out of double taxation systems. Now you've got things like the typical one of equity is a progressive taxation system. So you should, as you get more money, your effective rate of tax should increase as a proportion of your money, because you've got more disposable income left. But we have the quirk where between the income of 100,000 and 125,000, the taxation rate is 60%, whereas after 125,000, the taxation rate is 40%. So it's not actually a progression taxation system anymore. And so one would like to say, honestly, you could sort of say AT is having a go at the UK taxation system since for every chancellor since Gordon Brown. Yeah, it should be equity and it should be fair. But stealth taxation has come in and sort of had to go at that. But let's say the recent sort of mini budget from Truss and Kazi Khartoum, what you can sort of see is, well, we'll reduce your income tax by 1%, by a penny, and then we'll go from 20% to 19%. But what we'll do is we'll freeze all of the personal allowances. So although inflation's going up by 10, let's say inflation goes up by 10%. And your wages go up by 10% as a core, so your wages are going up by 1.9%, but we'll take 1% off, but actually we'll charge you an extra 1.9%, so actually everybody's behind it. Bit of an interesting one that it wasn't picked up when they were having the initial debate across there, because clearly it was just another stealth taxation, really. And then a couple of weeks later, what we sort of see in the papers is it's like, oh, hang on, they're sort of going to get us with a lot more tax than anything that was given back, because we just froze the personal allowances in the face of a massive wave of inflation. So anyway, that's enough of my moaning about the inequities of the current taxation system as a chartered accountant. So one's economy, got to be practical to be able to collect it, and the other one is equity, in terms of got to be seen as fair. Typically, equity comes along as the idea of a progressive taxation system, really. In this economy, it's also a part of sympathy, really. You see, ease and empathy are sort of, they're the same words for these kind of things here, but it's economy and equity anyway. I think that's it. So that's the end of the assessment. So what did we see on this one? Well, in the initial one, we sort of, I said, there's going to be some questions where you're just going to have to roll with it. I think there were probably 4 marks, like the whole 100 marks, where you'd sort of say, well, actually, I'm going to roll with that, really, and just, not entirely sure whether the answers are really right or wrong. A lot of written questions where we had to sort of get going, didn't we, with state, explain, and extend. And that gets us going, and also who's at the marks. A little bit of top and tailing in terms of, let's say, letters, and then, dear whatever, and yours sincerely, or kind regards, or yours faithfully. Then we had a lot of principles of bookkeeping controls, really, and also the introduction to bookkeeping, which we need to be good at. And in there as well, we had 2 digital accounting questions, didn't we? In terms of 2 digital accounting questions in this assessment. We'll see in the other assessment whether they follow the same thing, but I think that's a big thing from the examiner, and that's going to be interesting because it's missing from the traditional books on introduction to bookkeeping. In mine, because I thought the examiner would go with it, so I'm quite chuffed with it, which I'll sort of predicted that a bit, really. But I think that's going to be an interesting point for the exams coming up in the first round of the business environment assessments, because I couldn't see it beyond just a series of bullet points for what the examiners put in the syllabus, rather than any kind of explanation. And what we had in the answers was marks for any sensible answers. And so I was quite chuffed, actually, in terms of the way in which I've done, I think it's chapter 16 in the Introduction to Bookkeeping book, where I go, well, look, this is what the examiner says, but also there's all this other stuff as well that the examiner hasn't sort of said that would probably earn marks if you chucked it in. And actually, as highlighted, it has earned marks as we chucked it in. Really. A bit of law as we're going through, not that hard. We just need to sort of understand the general sort of principles of law, really. Enjoy your law; it's quite fun. And that was it, really. And we had a bit of corporate social responsibility as well, which was pretty straightforward. So that's the end of this assessment. I think it's an interesting one, because I don't think with the grounding of introduction to bookkeeping or principles of bookkeeping controls that there'll be a sufficient you'll have the sufficient numbers and scores there to be able to be successful in this unit, and that's really why it has such a low success rate when it's the business synoptic in the 2016 figures. And I write the book specifically to hoover up the marks in those sections. And then in terms of the written sort of side, first time that you'll have seen to have to write like an accountant, and I don't think anybody explains that in terms of the state, explain, extend, bullet pointy kind of approach really, that gets you going and gets the marks. So hopefully that was helpful. Good luck with your studies, and we'll see you on the next assessment, next book, or whatever the next video is.